Good morning, everyone. We're pleased to share our next panel discussion focused on insurance in a volatile world. So joining me here, we have several leaders from the insurance industry. We have Toby with Gallagher Re, and then we have Danielle with CSAA, and Dan Preston with Stand. So insurance is one of those topics that at the end of the day, all of us have a very vested interest in this personally, as well as in our communities and how we support our citizens and our residents and our business owners. And so, but at the same time, we're faced with increasing challenges in the insurance industry for our communities, especially when we're facing the realities of climate change, the increased uncertainty associated with the changing dynamics that we're facing. And so today we're really going to explore more as to, how the insurance industry is adapting, what are some of the changes that are coming in to help us achieve greater insurability, but also investability. So it's really a win-win solution for our communities and our public. So with that, I'd like to really open us up with an initial, conversation around what are some of the greatest changes coming in the insurance industry today that are helping us respond to this changing dynamic that we're facing. Want to go ahead?
Yeah. So I'll speak on behalf of a lot of the insurance carriers that are clients that we work with and reinsurance partners of those companies. You're probably like, what's reinsurance? Reinsurance is basically insurance for insurance companies. It's where a lot of the loss goes in these big multi-billion-dollar catastrophic losses, and it's where a lot of the capital sits and the volatility for this events. So they're really tied into what they charge for reinsurance premium, which then gets passed down to the insured, so that they're really tightly intertwined. The biggest thing that we think's happened, right? So there's been this change that's slowly happened over the last couple of decades, right? It's a combination of climate, a combination of building a bunch of homes. I think there's about 1.5 million homes over the last 25 years that have entered what we call the wildland-urban interface, basically areas that are close to forest and vegetation. And that happened slowly. And then the last 5 to 7 years, kind of in our world, there's been a sea change in what the implications of that has been, right? So the two big things I think is maybe worth sharing with you all is one, there's a big change in terms of the type of tools that insurance companies are using to evaluate wildfire risk and the aggregation management around that. A lot of the tools that were used before 2017, 2018 turned out to be underperforming and not accurate in representation of what areas are going to burn and what aren't. That causes a lot of short-term distress. It's also good for the market in terms of different views of risk, bring in different types of capital, and hopefully increase insurability. The other side of it is just the reinsurers have paid tens of billions in dollars of loss over that kind of new time period, and they've reset kind of their view on what the probabilities are of these type of events, which have pretty dramatic and rapid increases of what reinsurance would cost and the capital that was kind of sitting behind insurance companies. So overall, it's like a very dramatic world that's changed, but it's taken a long time to kind of get there in terms of the climate change and the way that we're building things.
Great, yeah, thank you. And Danielle, how about from a CSAA perspective? What are some of your greatest changes and innovative strategies?
Yeah, no, thank you. So going back about a decade, saying climate change was kind of controversial. And at this point, we can all admit climate change is real. It's here. It's something we're living with every single day. The other dramatic realization we had was you can no longer price yourself out of climate change. That's not going to happen. You have to actually address the risk. And so the way we think about the current landscape in California is not so much an insurance crisis, but a homes burning to the ground crisis that is causing insurance availability issues. And that influences a lot of our strategy and how we're addressing this. And so if we can stop these homes from burning to the ground, as a society lean in and stop this, the insurance market will become the robust, healthy, competitive market that we hope it will be. And that will also play into how the reinsurance market views the California market. And so what do we do to keep homes from burning to the ground? At CSAA, we are investing a lot into educating our members on what they can do to prevent themselves from wildfire. We are incentivizing mitigation efforts, and we are rewarding science-based risk reduction. So we lean heavily into the science, what actually works. We love to protect our members during life's uncertainties. We love to give discounts for efforts, but we really want to make sure that our members are truly protecting their homes from burning to the ground. And by leaning in with IBHS, CAL FIRE, San Jose State, UC Berkeley, we can understand the science of what truly reduces the risk, and then we can use that to influence our pricing, underwriting, and our rewards to our members.
Thank you so much, Danielle. And really building from that, Dan, from a stand perspective, what are some of the innovative strategies that you're using to also accurately price risk in the policies that you underwrite?
Yeah, I mean, I think it's clear resilience is ultimately going to be what helps us unlock insurance for California and the Western United States. But the challenge is that even just pricing that accurately will ultimately impact the value of homes substantially. In a lot of cases, we see what like an accurately priced risk would be is 3-4% of a home. And so I think the challenge here is that we know that the long-term solution is how do we make sure that these homes or properties are well mitigated so that both the likelihood that it burns individually and the cost of reinsurance, which is the collection of all of them happening all at once, comes down to a point where the cost of insurance is reasonable and what we're typically used to. The problem is we have a long time to see how these different technologies, these different methods ultimately reduce that risk. And like if we use like Florida as an analog, it took like 15, 20 years to adjust building codes, to adjust underwriting models and other things that ultimately led to the discounts that are now really built into a lot of those products. And so I think one of the big reasons we exist is to solve two problems. One, how do we value mitigation? And so we physically simulate that to understand what would happen if you changed, say, moving a tree or changing the siding of a home. And two, how do you execute on that? How do you help a homeowner understand how the aesthetics, the cost, and the safety are all impacted when you make those changes? And you really have to go beyond just offering a price or a discount. You have to help the homeowner understand how it's going to change the character of that property, how it will impact their price, and how to actually execute it all the way to the end. And I think unless you have actually built that, both understanding and that ability to help the customer, it's going to be really challenging to ultimately solve the challenges for insurance pricing.
Yeah, that's an interesting kind of trinity to bring together between aesthetics, cost, and safety, and really how do we bring that home to the majority of our homeowners and business owners across the United States ultimately as we evolve. So kind of building from that, Danielle, the state of California is really taking like a deliberative action to reduce the reliance on the California Fair Plan. And I know CSAA is taking a very proactive approach in terms of how you meet your customers and new customers. Can you share a little bit more about what you're doing with the My Home Hardening program? How are homeowners and new customers responding to that, and what do you see most promising about that approach?
Yes, thank you. So we really are, we applaud the department for recognizing the current insurance landscape and taking these big steps to bring carriers back to the market and again create that robust and really healthy insurance market. And we continue leaning into those efforts, not just by providing coverage. Very proud to say we're one of the carriers who have remained open for business over the last several years. We've earned that right. But by making coverage sustainable, by reducing wildfire risk at scale. And going back even before the My Home Hardening, we were one of the first carriers to offer discounts to our members for mitigating their homes against wildfires. And now with the My Home Hardening, we offer some of the steepest discounts in the market for our insured to complete all of those measures together. And it's up to 12.5% off the premium and also the Firewise community discount. So we really want to make sure that we are recognizing and rewarding the all of the efforts that go in. We understand that it can be quite an undertaking, and we want to make sure that our members are getting a large amount of discount on their premium. And then I think the biggest incentive we offer, which really shows how much at CSAA that we truly believe in the science-based approach to mitigation, is that we will guarantee to continue coverage for up to 3 years for our members who complete and earn the IBHS Wildfire Prepared Home designation. So that is a very science-based approach that helps our insureds walk through what needs to be done to protect their homes, and we will guarantee to continue coverage for our members who complete that. So those are how we're really approaching the market and leaning into how to protect your home. But then leading into also how our customers have reacted. They're very enthusiastic. They're excited. They're excited to have these discounts, that we continue the discounts, and that they can get coverage with us. But what we see is there are still some hurdles to work through as we get into the wildfire mitigation science. We're still relatively new on this journey. I kind of think of it as maybe a multi-generational to where we'll actually get to where everyone is taking steps to mitigate their home. Kind of like what we saw with seatbelts several decades ago. We're still early on. We're very proud to be an early adopter of the science and education. We've got some ways to go. Every little bit helps and matters when it comes to mitigating against wildfires. So what we're seeing, and we're putting in a lot of efforts now to understand the behavioral science behind it. My colleague Kira Payton has a session later today where she will also dig deeper into some of these things. But understanding for each of our members, what will motivate them? Is it cost? Is it just denial or resignation that there's nothing they can do about wildfire or that they're not at risk, and how we bridge those gaps? Is it aesthetics? The 0 to 5 foot defensible space is the single most impactful piece that any homeowner can do to protect themselves against wildfire. And so how do you approach a member and say, you have this rose bush you've had in your yard for 15 years, you love it, you can still have a beautiful space, move it 5 feet away from the house, and now you are more protected and have gorgeous landscaping. And so we are working a lot on the behavior, but also giving tangible evidence, working with UC Berkeley on the landscape design contest to show you can have these gorgeous yards that are also protecting you from wildfire.
Yeah, great insights. Thank you so much. So now we're going to shift and talk a little bit more about the reinsurance side of it, which obviously as we face these catastrophic wildfires like what we faced in LA earlier this year, really have a real impact, particularly in the reinsurance industry. And obviously Gallagher Re being one of the largest reinsurers in North America. You know, from your perspective, how do we move from uninsurability to insurability to investability, and how does reinsurance need to partner with insurance carriers to turn that into reality?
Yeah, it's a really good question. I'll take in a couple approach. So to start with, I think a few years ago, if you were to talk to the general reinsurance market who's providing this capital, taking on this risk, I think the consensus would be like mitigation really doesn't matter much, right? You're in an environment where you have these huge wildfires that are creating their own weather patterns, and you can only control so much. That over the last 18 to 24 months has taken a shift to where various degrees of mitigation make meaningful amounts of impact on risk and potential for loss. Where we've seen that like really transition to a much different view really quickly is there's like a subset of the market where you can find like larger parcels in large areas that have control and ownership of a larger acreage. And within those, which aren't a more standardized home, you can really control the environment. Because what we've seen is like in these really, really large events, no matter how much mitigation work you do, if you live in a cul-de-sac, which a lot of these neighborhoods are built in, it really doesn't matter what you do as much if your neighbor's house is on fire, right? But if you can control that environment, all of a sudden, like mitigation can work wonders. So then the question becomes, okay, now how do we evaluate what type of mitigation works, what type of credits are deserved in terms of premium for reducing that type of work? And I mean, we've seen kind of firsthand with the work that Stan is doing, like technology is changing, right? Like insurance industry is really slow and boring when it comes to this type of stuff. And when it's ripe for disruption, but more so I'd say improvement of enhanced views of risk from people that really understand and can evaluate this. And there's a tremendous amount of capital in the world that we operate in. Most of you probably aren't familiar with it, but there's like $800 billion of capital that is in the reinsurance market that is supporting kind of this risk. And there's basically indefinite amounts of capacity available for the companies that are out there that are taking a different approach and are using artificial intelligence and are going about underwriting risk in a much different way. And what's super cool about that is so much of the premium that everyone in California and cat exposed areas is paying for ultimately goes to reinsurance. Like, it finances the risk. So if carriers are out there really differentiating themselves in terms of the portfolio that they're making and the way that they're able to curate this book of business, you can get significant cost reduction in your reinsurance, which therefore can pass down to the consumer and the homeowner. So these insurance companies can offer the returns their investors need to get the capital that is just required to write the insurance product, but do it in a way that they can substantially grow because they can offer a more competitive pricing to their insurance carriers. And everyone else that isn't doing this is going to likely get adversely selected and really struggle to grow in the market. So I think our perception, or at least my view, is in this new environment that happened in the last few years, there's going to be a huge delta in who's doing insurance right and who's doing it wrong, how much profit those companies can make, and ultimately how much that they can pass down to consumers. And what we're seeing is a lot of carriers come in, or a lot of new capital coming in talking about it, but there's only a few that are really doing it. But the people that are doing it right are going to get effectively unlimited amount of capacity to grow.
Great. No, thank you. And I think that helps us kind of tie together the relationship between a single homeowner to an insurance carrier to the reinsurance and the entire investment structure that we need for healthy economic development across the United States. I'm going to shift a little bit and ask Dan a question here. So Stand is a unique company, and it's quite expeditionary in this space. And I'll just kind of quote, I think, part of how your ethos of Stand as being insurance that helps intervene in climate change to strengthen the built environment and reduce risk. So it's a really unique model that you've taken in terms of really building off of that. Can you share a little bit more about some of the really unique innovations that you're developed and developing in Stand to really help us solve for this insurability problem?
For sure. Thank you. So one of the biggest challenges with being able to understand how to value mitigation on a home is that actuarial science, which is the center of how we come up with that pricing, relies on a long history of data and different events. And so because these are so sporadic, you have to wait a long time to be able to see if one intervention actually led to a lower loss. So the discounts that are provided along the way tend to be small. Even though resilience can lead to maybe like a 90% reduction in the likelihood of a loss, you might see a 5, 10, 15% reduction. So the question that we asked is, like, we don't really want to wait to be able to insure California and the Western United States. How do we solve that problem today? The way that we solve this problem is by using computational fluid dynamics, so basically what we would use to design aircraft and spacecraft, to look at wind and ignition as a way of understanding what would happen in one of these events. And that's inclusive of what happens when fire creates its own weather and all of the different odd dynamics that happen in these large conflagration or overall wildfires. And through that methodology, it allows us to identify what are the specific vulnerabilities on the property that could lead to a loss. All of that starts with a 3D model of the parcel of land and the structure, and then we run the simulation. With that, we then can value it. We actually know prospectively what is the value of reducing the vegetation around the home, or removing this tree, or changing the siding, adding tempered glass, et cetera. And ultimately, that is the thing that we think then can link the value to the losses. And so if we can say, prospectively understand this home will be 90% less likely to burn, well, we can incorporate that magnitude of a discount into the product, and ultimately that discount could lead to the costs, or can pay for the costs that are the mitigation themselves. And so that underlying technology, which we are ultimately expanding into not just wildfire, but wind and hail and other areas, allows us to understand what happens to places across the world that haven't experienced a lot of these events what will happen when they do experience them, so that we can prospectively strengthen homes and properties across the world.
It's fascinating. So ultimately, you're really starting with the physics and the science, with the computational fluid dynamics and how fire behaves in the environment as a basis for how you're measuring risk and then pricing that risk and carrying that down. So it's pretty innovative. I know there's other areas inside the insurance industry taking similar approaches, but essentially building an entire portfolio around that framework is. So thank you very much. So we're kind of moving on now in terms of talking about like, what is the single, if you could pick one thing that is, the greatest opportunity and requirement in terms of improving and advancing insurability to wildfire, but climate-related hazards and disasters in general, what would be that single, if you will, silver bullet? And I know that doesn't exist, but let's say we could choose a priority. What would that be? And Danielle, I'll start with you.
Yeah, thank you. And I do want to also comment on something Toby said a second ago about that historically carriers and reinsurers, we've been slow to react to this. We've got a room full of wildfire experts. We are all actively working on understanding this. And I think one of the ways to innovate in how we do business is to get faster at recognizing those science-based approaches and what actually works. This is a real human issue that we're all dealing with. And I think the more that we can recognize what each community is doing and that what works, and to Dan's perspective, getting faster at recognizing these kind of smaller scale events, that's going to those who can recognize that faster and do it well, that's going to pay dividends just across the entire society as a whole. And that's really where we need to be. But for the single thing that we need to do, as I started with my talking, was get the homes to stop from burning down, protect the communities, help figure out as a society, so everyone involved, from the carriers to reinsurers to the HOAs, the individual homeowners, up through the communities themselves, is do what we can to protect the home, scale that to the community, scale that to the neighborhoods, get those fuel breaks, and do everything we can to stop the homes from burning down. But we're early in the journey. Every little bit helps. Everything we can do to stop that. And as CSAA, we are actively leaning in to recognize that and remain a leader in not only educating, but showing those rewards and incentives that we will cover you if you protect your home from wildfire.
Yeah, thank you so much. That piece of how we really kind of catalyze that culture shift and behavior change, right, amongst our communities, our residents, and our business owners is really paramount. I think we have a ways to go to really crack the code on how to propagate and catalyze that kind of change, but I think the unique things that you're doing are certainly helping. So Toby, from a reinsurance perspective, what is that one kind of key solution or requirement that you see in all of this?
Yeah, maybe I can answer that by putting together pieces of what both their companies are doing. I'd say that there's a view, again, that mitigation on a single home for most homes has some impact, but where the real value is, I think as Danielle said, is if we can get a community to do this, right? I think this is about education, and I think once that happens, at the end of the day, I like to use an example. I just moved, right? And it was cheaper for me to get insurance if I paid to get my alarm hooked up for fire and a burglar, right? So like there's incentive to the consumer. And I think at the end of the day, for this to really change, and it's a tough problem that we admittedly have, it's going to take incentives of the consumer, which ultimately comes down to costs. And if the cost of the insurance product can go down, the exposure to the overall industry is going to dramatically improve. Now, how do we do that, right? I think going back to your earlier question, which I don't know if I fully answered, I forgot the second part, so I'm going to use this to hit that up. The reinsurance capital that we speak of are really looking at insurance portfolios at like 50 to 100,000 feet, right? It's like looking at an entire book. And what we've found is that they're really eager to find partners that can look at individual risks dynamically and use technology in a way that has a way to improve the accuracy of the potential for loss, and then incorporate mitigation in ways that actually work. And their view is if they can kind of match where they probably have more experience, which is looking at like the probability of these big events occurring, where they're likely going to happen, with the right type of partners who are on the ground recognizing kind of what happens to individual exposures within the portfolio that they're writing. All of a sudden, the loss potential for wildfire like drops off the cliff. And if you're able to kind of match that perfect capital base with that perfect insight from the kind of more kind of best-in-class insurance companies, they can offer way lower insurance. And we're seeing that in our market. Like, we are seeing carriers that are deemed to be best in class getting way more capacity, and we're seeing a huge difference in pricing between what is perceived to be maybe the more accurate representation of risk in the better portfolios from the others. And that ultimately is going to go down to the consumer. And while it might be kind of a painful process last few years to work through this, we're like really positive that like ultimately it gives us a way out of this.
Yeah, thank you so much. And really that speaks to the importance of the precision and accuracy that we need in measuring the risk consistently so that we can accurately price risk and achieve the greatest benefit possible down to a local resident and homeowner or business owner. So Dan, coming from a newer insurance company, we're really innovating in this space. What do you see as that, number one solution or requirement towards solving for this?
Yeah. Admittedly, there isn't a single silver bullet, and I think I'd probably add that the incentive structure ultimately is a really key part of this. How do we make it clear that taking an action leads to the availability or the affordability of insurance? And so I think that's about valuing it, and it's about being able to make that clear for the customer. So maybe I'll add one other thing that I think is a critical part of that. If you don't solve for the value of the home, not just the cost of insurance, I think you also will fall down on this. And so when you remove zone zero vegetation, it changes the character. Your Zillow photos don't look as good. Your feeling about the property is different. And so both the emotional connection with what your property looks like and the way in which you value that home and the landscape is actually a really big part of that conversation too. So being able to help somebody design a beautiful and resilient home is a critical part of this, in addition to the availability and cost of insurance, because all of this actually is part of the same thing.
So speaking right to maintaining a certain quality of the character of that community and neighborhood, as well as at the individual property level. Yep. That's really interesting. So what would be your one takeaway for this group in terms of how we move from uninsurability to insurability and investability in this volatile world, obviously focused on wildfire, but also climate? I'm just going to go right in order. So Toby, go ahead.
Yeah, I think it's just, as my other panelists mentioned, it's time for the insurance industry to step up and I think radically change in an environment that's radically changing, both in terms of where people live, what's happening in the climate, and even more importantly, the technology we have today that we didn't have 2, 5, 7 years ago. And I think the combination of that will end up in a good place if there is a lot of investment from people to improve it.
Yeah. Thank you. So I do want to kind of, I guess, clarify or maybe mildly disagree with Dan's comment of 0 to 5 foot, you can still have beautiful homes. Sure. And I think talking about the value, having a home that's insurable, as we're seeing, does drive some value, because we're seeing homes that are having trouble being sold right now because they can't be covered. But I think digging into, this is a boil the ocean, multi-generational thing. Every little bit helps. Every step that we can do to mitigate our homes, to create fuel breaks, to protect our communities, that's going to create these massive dividends down the road. And the more that our neighbors see us protecting our home, that will influence them, because no neighbor wants to be the spark plug that takes out an entire neighborhood. And so that's my takeaway, is every little bit helps. We will get there as long as we all lean in together to solve this problem.
It's great. I think ultimately, insurers need to do more than just historically price based on the data that they have available to them and then just risk transfer. They have to play an active role in actually helping a homeowner or a property owner make that property resilient, which is how then they will be able to get better discounts, better pricing, and insurance availability for their customers, and that will be how they grow. But I do think that the way that insurers have historically operated, which is here's a price and then you just compare price across different carriers, is not going to solve the problem. You have to take an active role in resilience to help them get there.
Yeah, thank you so much. So we've heard some really great perspectives, starting from the role of the insurance industry needing to stand up, all the way on down to a community basis and also individual homeowners. So really insightful. Thank you all so much, and that's it for our session. So.
Okay.